financial analyst Jerry Mann is joining us this morning. Jerry, thanks for being with us. I appreciate your time.
No, thank you. I appreciate it. Great to be on the air in Kentucky. Actually, I lived in Kentucky for several years as a child, so I have fond memories of being in Louisville.
Well, good.
Yeah.
I'm glad to hear that.
Yes.
Come on by and we'll go to a derby together sometime.
Well, that would be nice.
Let's talk a little bit about the Dow Jones Industrial. Yesterday, good day on Wall Street, 203 points, 13-month high. That all sounds good, but it looks like there's a little bit of a weakening in the dollar this morning, or at least it sounds like that. What's going on?
Yeah, no, this continued weakening in the dollar has sent equity markets up. You know, as an international investor, you're looking at the U.S. stock market and seeing, hey, it's really cheap when you compare the fact that, you know, the exchange rate has given the dollar so much weakness. So it definitely has helped make the Dow go north.
So you're saying don't read too much into it on the positive because of the evaluation of the dollar?
Yeah, no, I think it basically will make U.S. companies more competitive in a sense because you know, if you're manufacturing something in the U.S. and you're sending it abroad, the dollar, the weakening of the dollar helps you. But in reality, you know, the stock market may be just overvalued based on the exchange rate. If we see a pullback now, and you know, if the dollar really is oversold and the dollar begins to strengthen, you know, that could really affect the equity markets as well. There's just been a very strong correlation between the stock market's rise and the dollar's weakness.
There's even been talk of pulling the dollar as the currency of choice, so to speak, when it comes to oil futures, that kind of thing. Do you suspect that could happen or will happen?
You know, I mean, that could be a long-term trend that the U.S. dollar, you know, loses its place in the world as the base reserve currency. But that would take a long time to happen, and I don't think it's of a short or medium-term concern for investors. I think really if you're out there and you're looking at the stock market today and you're living on Main Street, you're concerned with the disconnect between the fact that the Dow has gone up over 10,000 and the economy just, you know, it seems to be recovering, but you know, not nearly to that certain extent. So there's a real disconnect there, and that's and to a certain extent you could say, hey, it's somewhat reasonable because when we were down at 6,000, we were all looking at, you know, the end of the world and Armageddon, and I have friends who are saying, hey, I'm going to sell everything I have and move to Uruguay and buy farmland. I mean, that sort of attitude has gone away, and people believe that the system, even though we, you know, we may still be in a recession, our system is working, and the combination of the market and our government's action has really helped us to avert complete disaster. You know, I think that the equity markets could see some weakening in the weeks ahead. There may be a short-term pullback but we could see another 300 to 500 points before valuations really get stretched.
All right, now tell me about the pullback. What will that mean in terms of real life for Main Street guys like me?
Well, you know, in terms of us, I mean, those of us who have money in our 401ks are certainly excited that the valuations have gone up and feel healthy, and that gives us more motivation to go out there and spend, and maybe you'll spend a few more dollars in Christmas than you thought that maybe you weren't going to, you know, 2 months ago. So there's definitely an effect on Main Street in terms of just an increased level of confidence. But you know, the consumer has been hurt here, I think, permanently. The mentality of the consumer has really been hurt permanently in the sense that for years to come, I think people will be looking at saving and spending less and taking less money out of their wallet because just the volatility and the shock that happened last year will put a permanent scar on the mentality of the consumer.
How would that change our relationship, for example, with countries like China, which has really become economically dependent somewhat on the United States and the fact that our people like to buy a lot of goods? How will that change our relationship, at least financially, if not more, with the Chinese?
You know, we are obviously as you mentioned, the interdependence between China and the U.S. has just continued to grow stronger and will grow stronger. And to a certain extent, we are at the mercy of what could happen with the Chinese economy, even though it seems to be very robust and difficult. To see a Chinese market really collapsing. They are susceptible to the same sort of things that we are, lack of credit and whatnot and investment. And and we're both tied at the hip at this point. The U.S. and China is, we depend on each other so much. We're their buyer of exports, and our companies are banking on the fact that they'll be able to take advantage of a growing Chinese market.
Been trying to find out even more. This 10.2% unemployment, a little bit unexpected by the U.S. Federal government. With that in mind, what is that going to do for this upcoming final quarter, do you think, with the economy?
Well, just from a medium to long-term standpoint, the increased unemployment is obviously going to keep potential inflation in check to a certain degree. But again, if you open the newspaper every day and you read about unemployment numbers rising, you're just, from a mentality standpoint, the consumer confidence level is unlikely to recover anytime soon, because you just see this, and just a double digit of having a 10 out there as opposed to a 9. There's something about that effect on the mentality of the lay consumer. So I think that in generally it's not a good thing for companies, and hopefully we'll see an end to this increased unemployment.
All right, Yuri Mann joining us this morning. Thanks, Yuri. I appreciate your time.
Thank you for your time.
8:46. We'll get to a break. Rush coming up.